Good afternoon and welcome to the February 27th edition of Office Hours presented by the Maryland Center for Collegiate Financial Wellness. My name is Dr. Tisa Silver Kennedy. I'm the founder and executive director of the center. So we usually go live on Wednesdays, but had some technical difficulties yesterday. And so we are going live today, Thursday, and doing something a little bit differently. Going live on Facebook and YouTube. We'll come back to YouTube to annotate the video later. All right, so let's get into office hours. We always start out with a quick review of the vision of the center because some of you might be new to the Maryland Center for Collegiate Financial Wellness. So let me show you this. We have a vision for all college and career school students in the state of Maryland, and that's that they are able to achieve these 6 pillars of collegiate financial wellness. Those are being creditworthy, ready, resilient, empowered, successful, and thriving. And if that sounds like a vision that you'd like to support, please do visit us online at mccfw.org. And if you'd like to support financially, you can make a donation by going to mccfw.org/support. Now, this particular program, Office Hours, is for student loan borrowers to help people navigate student loan repayment. We've also added some questions to help people who are on the front end of the higher education journey and get into the FAFSA and issues with information with parents, guardians, and all of that stuff. But the goal is to help people make more informed decisions when it comes to paying for higher ed, whether it's on the front end or the back end. Now, this particular program, Office Hours, is presented for informational purposes only. We have to issue this disclaimer because every person's portfolio is different, and you have to make sure that you are considering your personal circumstances, your student loans, your household characteristics, your lender servicers, all of that, and combine that with information that you get from sources like the center. So all of that to say the information presented during this broadcast does not constitute personal, legal, or financial advice. All right, now that that's out of the way, let's get into some updates before I go to the questions that have come in from our community. The first update is around income-driven repayment and consolidation. Just wanted to let everyone know that doesn't know already that the online applications for both income-driven repayment and consolidation through studentaid.gov are not available at this time. We don't have a timeline for when those applications are going to be restored, but we do know that right now they're currently unavailable. If you go to studentaid.gov and log in and try to complete those tasks, you will not be able to access the application at all. Now, this comes after a period where we observed that the IDR application was down for a bit, then it came back, but in limited capacity. Then it was available and people could not transfer information electronically. They had to upload their W-2s and documentation. But when we say that it's down now, we mean that it's completely down. There's nothing you can do online in the way of applying for income-driven repayment or to consolidate your federal student loans through studentaid.gov. And this shutdown came as a result of a recent ruling that reinforced the blockage of SAVE, but also kind of expanded the purview of that blockage. So all the income-driven repayment plans, the application for them cannot be accessed online, nor can the application for consolidation, which had the IDR application baked into it. So as soon as we hear anything about the restoration of those applications, we will most definitely let you know. The second update I wanted to share is also related to studentaid.gov, and that has to do with the appearance of records. We're working with borrowers daily, as you all know, and in the process of dealing with borrowers and seeing what's inside of their accounts or what's visible on studentaid.gov, we've noticed a few things. The first thing is about the IDR payment tracker. Many borrowers have access to this tracker, and it's really important because it gives you a status update on where you stand relative to that 20 or 25-year milestone that offers cancellation through income-driven repayment plans. Well, I know when I log onto my account, I don't see the payment counter, but for other people that I've worked with, I see it as soon as they log in and get to the dashboard. But for me, I found that getting onto my dashboard on the right-hand side, there's like an information box that says learn more about IDR plans. And when I click there, it actually shows me my IDR payment counter in 2 versions, having to do with SAVE and another repayment plan. But the point is I was able to get to that information, just not the way that everyone else has been able to. So if your account is like mine and you don't have the IDR payment tracker visible, I hope that you can use the option that says learn more about IDR plans or explore IDR. And that way you'll be able to see how much progress you've made toward those milestones for IDR cancellation. As for IDR cancellation, right now, a lot of people are asking us, is it still happening? What's going on? And I just have to tell you, stay tuned. As far as we knew with this SAVE injunction, every plan other than IBR, which stands for income-based repayment, stood to be affected. But now that the IDR application is not available online, that means that people can't apply for IBR either. So while it appears that IBR is the only viable path to income-driven repayment forgiveness right now, people who are not in IBR cannot go to studentaid.gov and apply to get enrolled in IBR because the application is down. So like I said, as far as we know, IBR is still a viable path, but access for people to get to IBR is not available online at this time. I think that does it for the update. So at this point, I'm going to jump into our questions. Let's go to question 1. And as a reminder, if you have questions, please do leave a comment if you're comfortable, and I will take a look at the comments while I'm going through the questions that have already been submitted from our community. So question number 1, here it is. This is about the PSLF buyback request. It says the person has submitted a buyback request. What should they expect? Let's get a little bit of background before we jump into the answer. So, pardon the typo there on the first bullet, but this person has 120 months of employment certified by the same employer. That is a big hurdle to accomplish, so congratulations in advance. They also have a payment count of 115. So they've got 120 months of employment, and 115 of those months have already been counted as qualifying payments toward PSLF. Next, they have 5 ineligible payments from August through January, and that's due to the SAVE forbearance. They submitted a buyback request for the missing months. Now, we have a question for you as a follow-up. Have your loans entered repayment right now? And we ask that because the only way that you'll continue to earn credit toward forgiveness under PSLF is if your loans are in repayment. If they're not in repayment, then you're going to be relying solely on that buyback to recover the lost months. So if you submitted a buyback request goes through the actual PSLF reconsideration request. If your loans have returned to repayment, that means you have to continue making payments until the review of your account is complete and the buyback itself is approved. Now, the buyback has to be paid in order for you to get approved for public service loan forgiveness. So once the Department of Education communicates with you and lets you know what the terms of the buyback are, what your lump sum payment is going to be, you have 90 days to make that payment. So within 90 days of receiving that buyback agreement, you want to make sure that you make the payment so you can get over this 120-month requirement for PSLF. And if you do not make the payment within 90 days, then the agreement is set to be voided. So the good thing is the math is on your side. You've already got 120 months of employment, and that's critical because a buyback request is not going to be considered if you do not meet that 120 months of employment, that threshold. So you've got the 120, you've got 115 qualifying already. We just need to buy back the other 5 months so that you can officially cross over to the land of PSLF victory. Congratulations in advance. All right, I'm going to pause for a moment because I see a comment here. I want to give a shout out to Amber Chaney. Thank you so much for joining us and for leaving a comment. Always appreciate your support, and you have been just a great support for so long. And I can't say how much I appreciate you, but thanks for joining us today and leaving a comment. All right, let's get on to question number 2. I received this letter today before my follow-up with the student loan strategy coach from McPhew. Do I need to do anything? All right, let's take a look at the letter and see what it says. All right, so just a bit of a timeline here. In January of this year, the client met with a student loan strategy coach. They have 10 years of experience as a teacher in Prince George's County, Maryland. They previously applied for public service loan forgiveness, and they need to update their employment history. And they received the following letter from the Department of Education. All right, this letter, if you look at the picture, is known as the congratulations letter. And I say this often, this is probably the most clear communication that people ever receive during the public service loan forgiveness process. But it's a lengthy process. And after seeing so many communications and not being clear on exactly what they mean, people, at least the people that we have worked with, tend to doubt, or question everything. So this letter is actually the congratulations letter. It lists the disbursement date of the loans. It lists the types of loans. It lists the balance for each of those loans along with the servicer. And it also lists the effective date of forgiveness. So for this particular educator, they made the 120 qualifying payment count back in September of 2023. So more than a year ago, this person met the requirements of public service loan forgiveness, but they just completed the application earlier this year. So congratulations to this educator. We are so happy for you, and it's great to be a part of your journey. There's nothing that you need to do other than wait for the loans to show up within studentaid.gov with a zero balance. And also, in a few months, you should see those loans fall off of your credit report. Sometimes there can be a delay with that. But again, if you got a zero balance in studentaid.gov, then you are well on your way to getting that debt wiped off of your credit report. All right, let's take a look at the next question. It says, why the additional review? Can they remove any of my payment history that was already certified? So this is another question about public service loan forgiveness. Let's take a look at the background. So for the timeline here, in September of 2024, the employment verification was submitted. Then in January of 2025, they submitted a buyback request. This person has 7 months left to make payments, and the Department of Education is reviewing their employment history right now. So let's take a look at the answer. The PSLF buyback requires you to have already reached the 120-month mark of qualifying employment. So it's really important that you certify your employment up to the current time before you submit the PSLF buyback request, because you have to have 120 months of qualifying employment in order for that PSLF buyback request to even be considered. So it appears that what's happening now is they're reviewing your employment history to make sure that you have 120 months needed in order to get approved for the buyback. And I will say about the removing past months of qualifying payments, or at least qualifying payments that are counted toward PSLF, we have not seen a case where anybody had months that were previously counted reversed. We have seen counts, fluctuate on loans. Usually the counts just go up because more employment is being certified. We've also seen loans that have been consolidated and now have a zero count show up with qualifying payment counts. But remember, the only qualifying payment count that matters is the one that's connected to a loan that has a balance, okay? So hopefully this buyback request will be approved soon, and we congratulate you in advance. All right, let's move on to the next question. All right, this is the common one. It says, help, not sure what to do. I'm going to need some background on this, and it's a lot, so hang in there with me. All right, so this is another PSLF question. The person has 110 qualifying payments. That means they've got 10 more months to go to cross the finish line. In December of last year, they applied to switch from SAVE to IBR, and nothing happened. In early January, they followed the paper format to change their repayment plan. And then about 11 days later, they were notified of the switch to IBR, and their loans were placed in a processing forbearance that was supposed to end 60 days. And at the end of the 60 days, it would have been March 24th. The client received one letter that said the IBR payment was due on May 8th, and another had a payment schedule that had updated the first payment due date to March the 8th. On February 18th, they took a look at studentaid.gov, and it reflected that their loans were enrolled in IBR. However, their servicer, MHEC, had indicated that they're still in the processing forbearance with no payment due yet. So the client saw one thing in studentaid.gov, another thing in MHEC. This is something that is not uncommon. Sometimes you'll see different information between the two platforms, and usually the information that you see within studentaid.gov, or at least when it comes to balances, that information lags behind what the servicer has in place. So given that they saw, differing information across these platforms, the client decided to call MHEC, and they were able to get through to an advanced agent. The agent explained that if nothing had changed, the processing forbearance would have run out on March 24th. But there was also a background forbearance, likely due to SAVE, that would have started up again and continued on through May. And then the client would have entered repayment in June. So the client requested that the forbearance be removed quickly, and the representative, according to the client, the representative told them the forbearance was over and their first payment would be due in March. She mentioned that January and February may count toward PSLF. So as you can see from this client's experience, the switch from SAVE to IDR definitely had a lot of ups and downs, and we're hoping that this client is successfully enrolled in IDR so that they can keep on making progress toward the 120 payments they need to be approved for PSLF. So the question we had here is actually related to their employment. When was the last time you submitted your employment verification? We asked that because we still want to recover January and February. Those are months that the loans were in the SAVE forbearance. We want to recover those. And in order to recover them, you have to get to a place where you have 120 months of documented employment. So I want to give kudos to this client for following up with their servicer and being consistent with checking on studentaid.gov to look at the information on their account from the federal government's perspective and also from the servicer's perspective, and then calling the servicer when they saw that that information did not align. So the recommendation that we're going to give to you is, first, make sure that you've verified your employment up till now. Then second, please continue to monitor your account so that you can see if the due date remains fresh. You can also see if the repayment plan that you're in is the one that you want to be in and is one that will allow you to continue making progress toward public service loan forgiveness. All right, that was a really great question. Let's move on to the next question. That question is, can I go from this forbearance into the standard repayment plan? So this is a person whose loans are included within the SAVE forbearance, and they want to know if they can switch repayment plans. Let's take a look at the background. So this is a person who had been enrolled in the revised pay-as-you-earn plan, and then when SAVE was implemented in the summer of 2023, their loans were automatically shifted out of repay and into SAVE. The person has 59 qualifying payments toward public service loan forgiveness, and the person says, I am not moving till I'm forced. However, I am confused. So good thing is they went to the loan simulator at studentaid.gov, which allowed them to run estimates based on their loans. And here's what they found. Their payment required under the income-based repayment plan is $549. Their payment under the SAVE plan is $249. Their payment under the standard plan is $350. And their question is, can I go to the standard plan and get my last 61 months counted toward PSLF? They've also noted that some people have told them that it matters if they consolidated. And this particular borrower did consolidate in 2020. And then we've got some all caps energy here. I don't get it. Totally understandable. And hopefully we can give you some clarity here. So again, great job going to studentaid.gov and using that loan simulator to review the options. And also, it was good advice that the people gave you when they mentioned that it matters whether you consolidated. Consolidation makes a big difference in terms of whether a payment is eligible for public service loan forgiveness. So the question was about the standard plan. There are two versions of the standard plan. There's the 10-year standard plan, and then there's the standard repayment plan for consolidation loans, which for the longest had a repayment term of 30 years. Payments that are made on the 10-year standard plan do count or can count toward PSLF if you have the documented employment at the time that you make those payments. payments that are made on the standard repayment plan for a consolidation loan do not qualify toward public service loan forgiveness. So since this borrower consolidated, payments that are made on the standard repayment plan for the consolidated loan would not count toward public service loan forgiveness. Now, I do want to remind everyone that we're coming off of a stretch, actually it wasn't too long ago, where it didn't matter what kind of repayment plan you were enrolled in. If you had the employment history and the loans were technically in repayment, then those months could count toward public service loan forgiveness, whether you made a payment or not. But I want everyone to remember that those were special provisions that were implemented by the Biden-Harris administration, and that time period has passed. We are back under the more strict rules of eligibility for public service loan forgiveness. And under those rules, payments made on a 10-year standard plan would count. Payments made on the standard repayment plan for a consolidation loan would not count. So in this case, it would not be advisable to bank on getting credit for payments that are made on the standard plan for a consolidation loan. However, there's another option for public service loan forgiveness called temporary expanded public service loan forgiveness, also known as TEPSLF. Now, TEPSLF was created by Congress in response to the fact that public service loan forgiveness had a rejection rate of about 98 or 99%. So Congress wanted to do something about that. They created TEPSLF to basically give a pass to people who were making payments on the wrong repayment plan. So if you were paying, all throughout on the standard plan for a consolidation loan, the TEPSLF could help you get public service loan forgiveness. But TEPSLF has a feature that in the very last year, at the start of that year and at the end of that year, you would need to have made a payment of at least as much as you would have paid if you were enrolled in an income-driven repayment plan. So what a lot of people do is, after they reach the point where they know they have 9 years of qualifying payments, they switch to an income-driven repayment plan. And then in that last year, they pay on the income-driven repayment plan, and then they apply for PSLF once they reach 120. Now, this could work for this particular borrower. However, TEPSLF is not like other programs in that it does not have a specific date when it ends. Under the Biden-Harris administration, we knew that there was the limited PSLF waiver. It was supposed to end October 31st of 2022. Then there was the IDR adjustment, which had a deadline, and the deadline kept getting pushed. But the point is, there was a deadline, and we are now past that deadline. TEPSLF is different because it has no deadline. The program is set to end when the funding allocation runs out. So we don't know the exact date when TEPSLF is going to end. And for a person who has 5 years left, that's a lot of time to hold on to the possibility that there will be money left in the TEPSLF allocation. So I'm not saying that it's impossible. I'm just saying that there would be risk involved. So ideally, you would be able to switch into an income-driven repayment plan, but keep in mind that application is not available online right now. But as a backup plan, you could pursue PSLF through this temporary expanded version. And we'll just have to keep an eye out on the allocation to see how long TEPSLF will last. Because again, it does not have a specific end date. Great question there. All right, let's move on to the next question. That is, my loans are at 109 payments. I'm moving from the Save Forbearance into a standard repayment plan that is cheaper than IBR. What should I do? This sounds very much like the last question, and I think we're going to offer some of the same recommendations. Let's take a look. All right. So their employment has been certified through April of 2024, and they've got a PSLF qualifying payment count of 109, and that 109 is valid as of April 2024. There had a consolidation occur on their account. Their payment from the loan simulator on Save would have been $50 per month. IBR is estimated at $291 per month, and the standard plan is estimated at $256 per month. Now, I just want to point this out quickly. I didn't do this on the last question, but you can see why Save is so popular. The payment amount would have been $50 versus $256 and $291. But right now, Save is blocked. So for this person, the good thing is they are so close to the finish line, so the advice has a lot less risk than the advice that we gave for the borrower who's only 59 months into this PSLF journey. Since the person is already at 109 qualifying payments as of April of last year, March, which starts this weekend, March would make the 120th month of qualifying employment for this person. And once they reach 120 months of qualifying employment, that opens up the door for the PSLF buyback. So the type of repayment plan that they're enrolled in going forward, it still matters, but it doesn't matter as much as the past 120 months. So here's what we recommend. The first thing is submit a PSLF application to update your qualifying payment count at the end of March. March is what's important because March makes month 120, and you have to have 120 months of qualifying employment before the door to a valid buyback request is open for you. The next thing we advise is once the qualifying payment count, well, the qualifying payment count is going to stay at 109, but once the eligible payment count goes up to reflect that you reached 120 months of qualifying employment, that's the time when you you submit that PSLF buyback request, because the employment has been verified. Now the buyback can get pushed through. Since you've already got the 120 months of qualifying employment at that point, all you have to do is wait for the Department of Education to contact you and let you know the terms of your buyback agreement. That buyback agreement is going to tell you how much money you have to pay in a lump sum to repurchase the months during the save forbearance where you didn't have to make payments. And just as a reminder, since we are out of the IDR adjustment, which was that special initiative from the Biden-Harris administration that offered more leniency around repayment plans, payments that are made on the standard plan for a consolidation loan would not count toward PSLF, okay? So just remember, the IDR adjustment period is gone. We are back in a space where the rules are more strict, and in order for a month to count toward public service loan forgiveness, you have to have the qualifying employment, but you also have to have the qualifying repayment history. That means you need to be enrolled in a qualifying repayment plan. So good luck. Hopefully this borrower will experience victory soon, because month number 120 starts for them in just a few days. All right, let's move on to our next question. All right, this is shifting gears. This says MHEC aid. For those of you who might not be from Maryland or just aren't familiar with that acronym, MHEC stands for the Maryland Higher Education Commission, and MHEC offers more than $100 million worth of scholarships and grants through state programs every year. So if you're a Marylander, MHEC is definitely an agency that you want to make sure you are connected with. And I know that the answer for this question is going to be lengthy, so I just want to give one tip before I get into the answer, and that is if you are a Maryland resident and you are thinking about state scholarships and grants, you're going to be evaluated if you've completed the FAFSA, because MHEC can pull information from the FAFSA to assess your eligibility for state scholarships and grants. However, you can't receive those funds unless you have set up what's called an MD CAPS account. That's MD CAPS, MD CAPS account. You have to set up an MD CAPS account through MHEC so that you can actually receive the award if you are deemed eligible and if you are notified that you are going to receive it. In order for that cash to move, you have to have an MD CAPS account. And not having an MD CAPS account is a major hiccup for people who have been awarded state aid, but haven't created that MD CAPS account to make it possible for them to receive it. All right, so let's get to the background for this particular question about MHEC. It says, my mother never filed taxes and does not have a social security number. I receive aid from MHEC. My mother and her boyfriend have decided to get married. Does this impact my aid? Will I keep my GA grant? And again, the GA grant is one of MHEC's programs that they award. And so let's take a look at the conditions for getting a GA grant renewed. Now, all of this is straight from MHEC's website. So you definitely want to make sure that you get familiar with MHEC so that you can read these requirements and know for sure if your eligibility will be impacted. So just to review a few of these, because I don't want to read all of this to you, but your award will be renewed if you continue to be eligible for in-state tuition as determined by the institution you're enrolled in. So if you're in a Maryland school and you're considered an in-state student. Also, if you complete and file the FAFSA or the MISFA using MHEC's new MHEC One app by March 1st of this year. March 1st is the priority deadline for the state of Maryland, so please make sure that you complete your FAFSA as accurately and early as possible. Pardon that alert on my computer. All right. Next, you've got to continue to meet the award's annual income requirements. And these income requirements are linked to the poverty guidelines. So it is possible that your income could change so much so that you do not qualify for an award this year that you qualified for last year. Here are some more conditions for awards to continue being re-awarded in future years. Being enrolled as a full-time student at a degree-seeking institution, not being in default on Title IV aid. Let's move on to the next part of this. Students who receive the award for at least 2 years and thereafter must complete 30 credits to reinstate their GA award for the full amount. More fine print there. And again, all of this is available online at MHEC's website, so I highly recommend going there to make sure that you're familiar with all of these conditions for eligibility. The bottom line here is this. If your income changes or your household income changes significantly, then your eligibility could be impacted. However, in this situation, your mother and her boyfriend are not married yet. If they were to get married and the income changes, there would be a lag between the actual change in official household income and a change in household income for the purposes of your financial aid. Because the way that financial aid works is it's based on your FAFSA, and the FAFSA includes information from 2 years prior. So if your mother hasn't gotten married yet, that means we're looking at, another 2 tax cycles before anything would be impacted if she got married today. So keep in mind that there's that lag time. So your income for both parents would not be considered until at least the 2027-2028 academic year, depending on when your mother and her boyfriend decide to get married. And we didn't hear from this student about what year they're in, so they may be out of school by 27-28. But just know that the household income change would take some time to show up in your FAFSA because the FAFSA is using information from 2 tax years prior. All right, let's move on to our next question. That is, how does the FAFSA work? We could host an entire edition of Office Hours about how the FAFSA works and probably still not, get beyond the tip of the iceberg on that. So let's get some background on what this question is about specifically. Right, it says, I have an important question to ask. I'm a new immigrant to the States and I want to go to school soon. I'm 20, by the way, and I want to go to college and get a degree in nursing. Would FAFSA pay for everything, or do they just reduce cost? Okay, quick point to note here about terminology. FAFSA stands for the Free Application for Federal Student Aid. So the FAFSA itself is just the application. Now, FSA stands for Federal Student Aid. That is an office within the Department of Education who they're administering all of this, and federal funds would go through them to perhaps help you pay for college. But the FAFSA itself is the form. So let's take a look at the answer. The answer depends on your citizenship status. You may be eligible to complete the FAFSA and receive some type of federal financial aid depending on your status. So there's a link here, and I'll make sure that we drop this link into the comments so that you can review the different conditions for eligibility and see if your situation aligns with any of them. If it turns out that you are eligible to complete the FAFSA and you are eligible to receive federal financial aid, you want to make sure that you complete the FAFSA as early and as accurately as possible. For the state of Maryland, the priority deadline is March the 1st. Other states have other deadlines. And hopefully this fall, we'll get back into a cycle where the FAFSA will be released on October 1st. as it's supposed to be. I think we're there, but we'll see what happens over the next 7 or 8 months. But you want to make sure that you fill that FAFSA out as early and as accurately as possible. If you make mistakes, that can delay the process of your school being able to review your FAFSA and let you know what kind of aid you qualify for. So good luck to you. All right, let's go to the next question. It's my parents can't fill out the FAFSA application. This is also a common concern. So let's get a bit more background before we dig into the specific answer to this question. All right. It says, hi, I started my 25-26 FAFSA form and invited my parent, but it does not appear on their account. They received an email with my invitation for them to fill out their part of the FAFSA. I logged in from a laptop and accessed the website through email, but it still doesn't work. My parent is an immigrant. I don't know if this has anything to do with it. I was able to fill out my FAFSA last semester. Please help. All right, so we've got a follow-up question here, and it has to do with, have you sent the invitation multiple times? Now, at the time that we received this inquiry, the FAFSA issues alerts, they were inaccessible, but thankfully this was updated. So according to the Department of Education, the resolution for this issue is that if the contributor, that would be your parent, has a studentaid.gov account, the user, that's you, the student, should re-invite the contributor to their FAFSA form by making sure that they type in precisely the last name, the date of birth, and the address the contributor used in creating their account. And the user should invite the contributor only one time. This is also just to reiterate that point about accuracy. They've asked you to enter the contributor's last name, their date of birth, and address precisely in order for this invitation to work and for the process to move forward. If you change anything, then there's a possibility that things will not work, and that will delay this even further. So make sure that you've entered that information precisely. And if you've done that and it still doesn't work, then we recommend that you reach out to the Office of Federal Student Aid. They're online at studentaid.gov, or call them on the phone. They should be able to help you work through what's happening. And it would be best if you call at a time when your parents are available so that you can all work through it together. And also when you have accounted for wait time, because there's a possibility that you might experience a lengthy wait time in trying to get through and speak with an agent. All right, let's move on to our next question. That is, can I get financial aid from a free college, and should I complete the FAFSA? Quick note here before I answer the question. Sometimes we get questions from people who say, well, why do I need to complete the FAFSA because I go to college free, or college is free for me? And you got to be very careful with how you use the word free, because when you say free, it makes it sound as if there is no cost. And even if it's free to you, there's still a cost that's being paid by some other party. And if the cost is being paid by another party, then that means there's probably some paperwork or some requirements that you have to go through in order for that cost to be paid. So it's not free, it's free to you. And also, what level of free is it? Is it tuition free? Is it tuition, room and board free? Is it tuition fees, room and board plus a stipend kind of free? Free is a very heavy word. So let's take a look at the background before we get to the answer for this specific question. All right, it says I'm in community college and I get tuition for free. However, can I still apply for financial aid to help me pay for rent? I asked my advisor about it and she said no, but I'm still unsure. I want to thank this student so much for submitting the question and also for asking an advisor. Just a quick note here for students. It's good to ask for help, but if you have a question that's about financial aid, the best place for you to go is to an advisor who's in the financial aid office, because you may speak to someone who's an advisor, in academic services, career services, something like that, and they might not be familiar with the financial aid process or financial aid eligibility. So if you have a question about financial aid, make sure that you go to an advisor or a counselor in the campus financial aid office. So you can apply for federal financial aid through the FAFSA, and that's online at studentaid.gov. Now, the student mentioned here that college for them is tuition free, but we all know that there are more costs to college. Beyond tuition, there's fees, there are books, supplies, perhaps a meal plan, or housing. If this is a college or university that has residency, like on site. So you have to look at the college's cost of attendance. The cost of attendance is basically your school's best estimate of how much it costs you to attend the school for 1 year. That cost of attendance usually does include tuition, fees, books and supplies. There might be a miscellaneous line item there for personal expenses, transportation, meal plans. Your senior year, perhaps there's a cap and gown line item in there, but it's basically a summary of all the costs and putting a price tag on the maximum amount of money that the school believes it should cost you to attend for just 1 year. So if your cost of attendance has room above and beyond the tuition charges, and you complete the FAFSA and are deemed eligible for federal financial aid, you could receive funding that could help go toward your other costs. But at the core of this is you need to be in touch with the financial aid office. Please reach out to a financial aid counselor or a financial aid advisor on your campus so they can explain to you your eligibility for financial aid. And if you are eligible, you want to make sure you complete that FAFSA early and as accurately as you possibly can. All right, coming up on our last question. That is, can I be considered independent? This is a kind of a loaded question too, because the word independent has many meanings. And what happens a lot in this space is that people sometimes confuse independent for tax purposes with independence for financial aid purposes. And those are two different types of independence. So let's get some background on this before getting to the answer. So currently I have very minimal contact with my parents. I've lived with my grandparents from a very young age, but I've been in contact with my parents a couple of times each month until about 2 years ago when I've gone multiple months with no contact. Both parents are unreliable. One has had no income for the past 3 years. Both are in jail, but will be out within the next 2 months on minor offenses. Ideally, I would rather not have them related to my future education. I've never been in an abusive situation with them or something that could be considered it. My mother has had sole custody of me, I'm 18 now, for all my life, as my grandparents had little reason to get legal custody over me. Neither have provided money to help my grandparents raise me in multiple years. Are these adequate grounds for independence according to the FAFSA? Before I answer this question, I just want to say to this student that I appreciate your transparency here. And this kind of transparency is very important for the financial aid process when it comes to arguing for your status to be shifted from a dependent student to an independent student. That process is called a dependency override. In your campus financial aid office, those administrators will be involved in making the decision as to whether you are going to be granted an override and switched from dependent to independent. Beyond that, to the student, this was just a lot to deal with. So kudos to you for pursuing higher education and pushing through this, and also to your grandparents. Let me give you a specific answer to the question though. As I said before, make sure that you contact your financial aid office, because the type of information that you shared in submitting this question is the type of information that your campus financial aid office will use to evaluate your situation and determine if you can be switched from a dependent student to an independent student. During this process, or asking for a dependency override, you have to submit documentation. So this will be letters, evidence that supports that your grandparents have been your guardians. You could get documentation like this from a doctor, a therapist, or a staff member at your high school. And we wish you the best. All right, I'm going to check the comments. I don't see anything. And that was our last question. So I want to wrap up things by pointing you to a resource that's exclusively for Marylanders with student loans, and that is the Student Loan Ombudsman for the state of Maryland. The Student Loan Ombudsman is housed in the state's Department of Labor, And we recommend borrowers reach out to the Ombudsman's office when they're experiencing issues where they've reached out to the servicer and they have not been able to get resolution. Sometimes it's helpful to bring in a third party to help push things forward or to advocate on your behalf or to launch an investigation. And those are things that the Student Loan Ombudsman's office can do. So student loan servicer problems that the Ombudsman can assist with include failure by the servicer to communicate with the borrower, errors in crediting principal and interest payments, misapplied payments, inaccurate interest rate calculations, billing errors, loan consolidations or modifications errors, and or inappropriate collection activity or tactics. So if you're having an issue with your servicer and you have attempted to resolve it directly with them, but you don't seem to be getting anywhere, reach out to the Student Loan Ombudsman, submit a complaint, and they'll take it from there. All right, so it looks like we don't have any other questions. I want to thank everyone for submitting questions and for also joining us for this February 27th edition of Office Hours presented by the Maryland Center for Collegiate Financial Wellness. Please do keep in touch with us. We are online at mccfw.org. We are on socials. We are on X, the platform formerly known as Twitter, Instagram, and Facebook as @the MCCFW. And I'm going to check the comments just one more time to see if we have any new questions that have come in. And I don't see any, so I'm going to take that to mean that we've answered all your questions. All right, so this time we did something a bit different. It's Thursday instead of Wednesday because we had some technical difficulties yesterday. It's also evening as opposed to the afternoon. And we also chose to broadcast straight to YouTube this time. So if you're watching the YouTube video, we are doing this live, so the video is not annotated yet, but it will be soon. So that if you want to come back and view the replay, you can go straight to the content that matters the most to you. In the meantime, if you have any questions that come up, feel free to tag us on social media. We are at the MCCFW. Or if you'd like to submit your question in a more private format, you can go to mccfw.org/contact. Submit your question there, and we might choose it for the next edition of Office Hours. I'm going to check the comments one more time. I don't see anything. So I'm going to wrap things up. I thank you so much for joining me for this edition of Office Hours. My name is Dr. Tisa Silver-Kennedy. I'm the founder and executive director of the Maryland Center for Collegiate Financial Wellness. We appreciate your engagement. If you're a subscriber, thanks for being an office mate. If not, please do like, subscribe, and stay engaged. There's a lot going on in the world of student loans right now. We are doing our best to take stock of that information and keep you up to date and on track to reach your repayment goals. So thank you. We appreciate you. And just hang in there. Try and be patient and also be consistent. One last tip before we go. You should go, at least we recommend that you go to studentaid.gov and download your student loan information. Download your aid history. Just because with some of the things that we've seen, some changes to federal agency websites and the many transitions that student loan servicing and student loan records have been through over the past couple of years, sometimes records get lost. From what we've seen, those losses seem to be temporary, but they can still be very frightening. So you can go to studentaid.gov, and after you've logged in, you can download your aid history so that you have that on hand and you know exactly what you're dealing with. Even if the display of that information changes, you have a copy of that record, and you can keep on looking at studentaid.gov periodically to make sure that your records are displaying accurately. All right, I think that does it for me. No other comments have come in. Again, thanks for your engagement. Like and subscribe. And until next time, be well.